All right, thank you. I thought for a second we was going to have a big screen, and fill up the whole thing, but this is big enough. I think this can work. Good night, everybody. I just want to welcome everybody here for next stage in the evolution of Jamaica capital market. We're very happy that you can join us today. Essentially, the question that we wanted to answer with this fund is, how is it that we can make the average investor benefit from the local market, the local stock market? In other words, how is it that we can make the small investor get the same type of return as the large investor? And that is why we came up with the Sagicor Select Fund, right? Because our simple mantra at Sagicor Investment is that we want all Jamaicans to be able to create, grow, and preserve wealth. And that is key for us, all right? And so that's what this company is all about, is to help average investors to be able to create, grow, and preserve their wealth. That's what Sagicor Select Fund is about, right? So in 2018, we had extensive discussion around how is it that we can bring that value creation process to the average investors. And in 2019, we implemented. So in August of this year, we listed the first fund, the Financial Select Fund, which essentially, most of you here would have participated in. And if you did participate, you can give yourself a round of applause. Not just because of the value proposition of the fund, but because you participated in something that is revolutionary in Jamaica capital market. It's the first listed equity fund that's on the market. So now tonight, we're taking the next step. So this is step 2 in the evolution process, all right? And we have a little presentation that we just want to walk you through. So essentially tonight, most of you would have been familiar with the structure of the company. But we want to just briefly talk about the structure of the company. The first fund, which is the Financial Select Fund, just to give you, where we are with that one. Talk about the new IPO, the Manufacturing Select Fund, and then outline the rationale and the benefits for investing in the fund. All right? So the overview of the company. Well, the company, as we said, we started the implementation in January. So in January, we started the company, and it has 5 classes of share. So far, we have issued 3 classes of the shares, Class A, B, and C. Class A is essentially owned by Sagicor Investment. And all it does, there's no financial benefit for the Class A shares. It just gives Sagicor Investment the right to set the rules for the company, essentially. All right? And then the Class B shares represent the Financial Select Fund, which, again, most of you would have invested in. All right? And then now we're coming with the Class C shares. Right? So we have issued some of the 1.1 billion of the Class C shares before. And then we're issuing 4 billion more in the next couple of days to new investors. So essentially, this graph just shows, what the different classes of shares and what it represents. So the Class B shares essentially represents the Financial Select Fund, and the Class C shares represents the Manufacturing and Distribution Select Fund. And again, if you're a Class B shareholder, your only right in the company is the assets of the Financial Select Fund. If you're a Class C shareholders, which you all will be, then your right will only be to the Manufacturing and Distribution Select Fund. All right? The company is guided by the board of directors. Essentially, they are the ones that help us to make the decision-making process. We have Dr. Warren Chin, Kevin Donaldson, Janine Shaw, Omar Brown, Daniel Silveira, Vincent, and the company is chaired by Mr. Colin Steele. Now, the directors, I imagine, are sitting on that side. You want to stand and let the persons acknowledge you? Daniel and Faith. I saw Omar earlier. Oh, okay. All right. So those are the directors of the company. So I just want to talk a little bit about the first fund. All right. So the first fund, it was very, very clear what we wanted to do with the first fund. It had 2 objectives, nothing else. The first objective was that we were going to invest in the financial stocks. That's all it was going to do, just invest in the financial stocks on the local market. And then the second objective was that we wanted to track the index, the financial index that was created by the stock exchange earlier in the year. So what has the evidence been so far? Have we accomplished our mandate? Let's see. Well, essentially, we have invested in all the companies. Well, sorry, there are 24 companies, and we have invested in 22 of the 24 financial companies on the market. So this is a representation of the companies that we're making. And essentially, we're in a positive. We're making money on all of the investment that we made, well, most of the investment that we have made so far. So we are invested in as we told you that we were going to do, in the financial companies. And then this graph essentially shows that we are actually achieving the second objective. And the second objective that we wanted to track the financial index. And so the blue line is the value of the fund, and the green line is the index. It's not one for one, but essentially it's moving in the same direction and mimicking it, right? So we are achieving both objectives. One, we invest in the companies, and two, we're tracking the index. However, in recent times, we understand that there are some concerns with the value of the fund. And why is it? Well, since the start of the year, the stock market has gone up to its highest, 40%, to the end of July. But since July to the end of October, and even currently in the second week of November, the market has fallen. In other words, from the high of 40%, the market has slid 10%, but down to around 30% year to date in terms of its performance, right? But the dip is natural for equity markets, for new investors, as the fallback in stock prices is natural. Why? Did I go too fast? No. Okay. Right, so it's natural. In other words, look at what happened in 2017. This graph shows what happened in 2017. Twice in that year, the market pulled back. And what happened in subsequent period? It pulled back, rationalized what's happening, and then moved forward. It did it at the end of January, and then it recovered at the end of March. Likewise, it did it between September and October. I think it was like second week of October, and then it recovered in November again. It's natural for the market to pull back. That was 2017. In 2018, what occurs? The same thing. But in each instance, notice where the market ended up. At the end of 2017, the market was up 50%, right? Despite the pullback. And then in 2018, the market pulled back again, but it ended the year at 31%. But even though the market pulled back, and some persons were getting pessimistic, look what it did in 2019. It pulled back again in 2018, remember? But look what it did again in 2019. It actually raised up. It went up as far as 40%. So the pullback that we're witnessing is only natural. And it's natural part of the equities market, right? So what are the quick observations that we can get? That the market will pull back after it make a rally, all right? But the pullback is for investors to assess. What is happening at that point is that investors are assessing their position. They are looking at what is to come next. What is the earnings potential of the companies that they are investing in? So some persons reduce their position, or sell down their position while they make that assessment. It's only natural. Now, if the profit potential remains strong and the economic environment supports it, then the market will rebound and continue. So the pullback that you're seeing currently in the market, we don't expect that to last forever. Why? Because if you're following the market, what we have realized is that most of the companies are providing positive profits. Not so? Yes. Right? And not only that, the economic conditions remain supportive of companies' growth. Not so? All right. Not so? Yeah. So don't be too alarmed. But notwithstanding the pullback, look at what the fund Select F have done for you so far. Again, when you're invested in equities, you're going to get returns two ways. You're going to get returns, one in the price appreciation, and the second one is with the dividend that you receive. And we paid a dividend, CEO. Group CEO, Chris, we did pay a dividend last. Right. Right, so we paid a dividend, and the dividend is essentially about 1%. You know, some persons were saying small, but 1% in a market that paying you around 2% is not bad. 1% in 3 months, actually. Not for a full year, in 3 months. All right? So your total return since August, because we listed the fund in August of 2019, right? Your total return is around 16%. So my question is, or how we looked at it is, what would you have done otherwise with your money to earn that type of return? And we look around at the different options, and none of the options that we looked at could have given you 16%. So I mean, the dollar had run away. Well, not run away, but everybody know what happened to the dollar for a while, right? It had only gone up, what's that, 4.5% since August, despite how far it went. And Treasury bill, again, I mean, or your bank savings account not giving you that type of return. So you are invested in a good value stock, Sagicor Financial Select Fund. All right? So now we just want to focus on what we're really here to talk about, which is the Manufacturing and Select Fund, Manufacturing and Distribution Select Fund. And again, what we're trying to do here is the question we're answering is the financial stock the only stock on the market that can provide the type of return that investors want? In other words, is the financial stocks the only stocks that have the right value proposition? And the simple answer is no. There are other companies on the market that can provide you with a decent return. And so that is why we created the Manufacturing and Select Fund, because we believe that there are companies in the manufacturing and distribution space that can provide that type of return as well. All right? So again, it has two clear objectives, very, very clear. One, what is one? No, man, you can't say it louder, man. What is one? I want everybody to know what they're investing in, you know. Right, that's exactly what you're going to do. It's going to invest in the companies that are in the manufacturing and distribution space. Those companies that are listed on the main and the junior market of the stock exchange. All right? And then the second objective is what? You're going to track the index. Very, very clear. Those are two things that we want to do. We're not highfalutin and putting any bells and whistles on it. It's just very clear what we're trying to do. Two things. Invest in the companies, the manufacturing and distribution companies on the market, and two, track the index. That's it. All right? So what are those, or which companies? I don't know if persons at the back can see it, but essentially, these are the companies, these are the 30 companies that we're seeking to invest in. The top 5 companies account for about 90%, our top 10 companies account for about 90% of all the companies in the index, right? Led by Wisynco, Carib Cement, Grace Kennedy, Jamaica Brothers, Carrier, Separate. You know, those are some blue chip companies that are on the market. Those are what we are going to invest in. And then the next question is, you know, in what proportion will we invest in them? In other words, how much we will buy? Well, when we raise the $4 billion, right, 18% of it will be in Wisynco, for example. 14% of it will be in Carib Cement and 14% in Grace. That is how we're going to spend the money. All right? So of all the companies, if you look at this chart just breaks out the companies and the sectors, the subsectors that they are in. So about 55% of it, 55% of the companies are in the food and beverage industry. And we feel good about that industry. And I'll tell you why in a bit, right? But there's also a concern about our ability to get the stocks to put inside there, because some stocks are not as liquid to get, right? But then we believe, based on the size of our fund, that we are able to get the stocks. Because again, in terms of the entire market, our fund just represents 0.2% of the entire market. That's very small. And in terms of the index, it's just 1%, or around 1% of the index that we're trying to get. So even though $5 billion is is a lot of money, right? But in relative terms, it's small. So we believe that we can achieve, we can raise the $4 billion and buy $5 billion worth of stocks to seed the fund. All right? So what's the rationale behind investing or creating this index fund? Well, what we know is that there's a lot of interest in the stock market in recent period, and rightly so, because the type of returns are there, you can't get them anywhere else, right? But then the returns are there because the companies are making profit, right? And there's investor confidence, by and large, right? And not only that, there are a lot, the economic environment, as we said earlier, the economic environment supports it. Unemployment at its lowest in a very long time, interest rate very, very low. I mean, if you're really into economics, if you watch a reserve and you realize that's at a good level. So the economic environment supports the growth, right? So here's the question that we sit down and thought about. Yes, we have done the financial sector, but which other sector would provide the value that investors really want. And what we pull out was the manufacturing and distribution sector. So we did the financial sector, which accounted for about 11% of GDP, and we looked at the other sectors, and the manufacturing and the distribution one is the one that jumped out at us. Those the manufacturing and the distribution accounts for around 26% of GDP. And the sector, well, there was a recent reading, I think the reading came out today in terms of the economic performance. And year to date, economic grew around 1.2. The finance industry is about 3% in terms of the GDP growth. And the manufacturing sector is a bit over 1%, 1.2, I believe. All right? So we are in our growth, we are invested in the growth sectors of the economy. All right? As I said before, the unemployment level is low. And if you talk about the brands that we're seeing, Cohen, Grace, and Separate brings, when persons are employed, what them going to buy? Somebody said water with a wow. You get what I said? You're right, the money is going to be spent on those kind of things, right? So again, these are the things that are, and then one of the things we also notice is that the stock of loans towards the sector is increasing. And why? Not because they're them over-leveraging or anything like that, but because they're retooling and they're also refinancing some of the higher cost debt. So the profitability of some of these companies will improve as time passes. All right? And again, if the profit increase, then the value of the company will increase. So our outlook for the sector is favorable, and we expect the sector to do well over time. All right? In total, the net profit of all those companies, all those 30 companies that we looked at is about 25 billion, and it has a return on equity of 17%. That's very good, I think. You know? As Kalila mentioned earlier on, she stole my thunder because this was my power slide, you know. But nonetheless, you know, those companies on average has provided a return of over 500% over the last 5 years. Since August 2014 to August of this year is over 500% return. Again, that's very, very good, we think. And something that, you know, that's the type of value that we want to bring to investors, right? Just for this year, we just pull out some of the companies that has performed extremely well this year. Fontana, Wisynco, Carib Cement, Seprod, Honeybun, Blue Power, Lassem, all companies that have provided greater than 50% return since the start of this year. Again, all right? You know, the question then asks is, do you expect that high rate of return to continue? Well, I'm very conservative. So what I would say is that, yes, I expect the companies to continue to perform, but at that same pace, maybe not. So if you get 20%, I don't think the 20% is a bad number, you know? So what we do expect, or we do have a favorable outlook for the sector and the companies that are inside here. What are the benefits? So essentially, you get exposure for the large blue chip manufacturing and distribution companies in Jamaica by investing in a fund. All right? So you purchase you have to purchase a minimum of 1,000 shares in the IPO. But you spend $1,000 and you purchase the shares, and you get exposure to all 30 companies. All right? You also get the opportunity to own a piece. Your share of wealth from investing in the profitable companies in Jamaica. But I think the key thing, the key benefit, I think, is that the cost of purchasing one share and get exposure to 30 is a lot lower than having to purchase all 30 stock. So you can go ahead and try to replicate, you know. You could, if you could get some of the stocks, right? You could. But even if you could get all 30, the cost for doing so is a lot higher. And then the next question you're going to have to answer is, how much I buy of each? You know? Which is what the fund is actually answering. So the fund is actually answering two things. What stock to invest in and how much of that stock you must purchase. Right? So I think that's the key benefit. The key benefit, again, is that it's a low cost and an efficient method of investing in the stocks on the Jamaican market. And then also, it reduces the impact of company-specific risk. So you're investing in the stock market, and some of us, we like Wisynco, so we only buy Wisynco stock. But, it's equity investment, and things can change. Nobody knows exactly what the future holds, right? So things can change. So if Wisynco go down, then, Wisynco not going anywhere now. I'm just giving an example, right? But then, because you invested in 30 stocks, if one, not performing so well, then the others will help you out. And so that's the key, right? So those two, I think, are the key benefits to it. But again, some of these companies are the best dividend paying stocks on the market. And again, how we plan to operate the fund is that when we receive the dividend, we pay it. And the intention is to pay it biannually. Again, with this first fund, we pay out our first dividend because we found ourselves with too much cash. And the intention is not to have a lot of cash in the fund. All right? So as we get the cash, if it's more than 2% of the total fund value, we're going to pay it out to investors. And these companies that we're about to invest in, they're good dividend-paying stocks, so you can expect to get some dividend. All right, so what it is that we are really offering, because I tell you all about the fund and how we feel about it, because we're very excited about the fund, But what is it that we are really offering? It says 2.5 billion Class C shares, but, if I have a marker right now, I just cross it out and say 4 billion shares. That's what we're trying to issue to the market. We're trying to issue 4 billion shares at $1 and a preferential price of 98 cents. Preferential price to Sagicor employees. But essentially, you have to buy like 1,000 shares. That's the minimum that you have to purchase. But my boss said the price of 2 patty and an orange juice. Half a latte. That's a good one. Right? But I think you get the point, though. You can create a wealth by not buying any latte tomorrow and purchase some of these things. So we're trying to raise close to $4 billion. That's what we're trying to raise. We're trying to raise $4 billion, and the purpose of it, again, very clear, is just to buy the stocks so that we can track the index. That's essentially what we're trying to do. There's no bells and whistles to it. There's no fanciness about it. It's very clear what we're trying to do. So that's our offer. I hope I've shown you enough to get an application form from tonight. I don't know if anybody around there. You can get the application form tonight and sign up to become a shareholder in the company. Right, I was reminded before, I dropped the mic. Before I leave, I was reminded that we're accepting application at the hub on Dumfries, at 6 Dumfries Road, because that's how we're trying to coordinate the activities for the IPO. So, we're not going to run you too much if you come to the office, the Sagicor location. We have 14 locations island-wide, right? But what we really want is for the application forms to go to the Dumfries location, for those in Kingston. Of course, if you're out of town, then you go to the branches that are out of town. But we're working on it. So when we come in with Class D, it should be ready. All right, good night. And I hope, as I say, I hope you all, have found some value in what we've saying tonight, and you sign up your application form. Thank you.